Well, just in the interest of time, everyone's time I know is valuable. We'll go ahead and get started. Just ignore the title of this. I forgot to change this. So we will be talking about insurance today, not enforcement. So for those of you who may not know me, I'm Quinten with Vial Fotheringham. I am an attorney here in Arizona. I've been doing this type of law for, I think I'm going into my 15th year of doing HOA law. And I'm excited about this class today because we have with us Daniella Burg, who's on the screen with us today. She's joining us from Philadelphia, the Philadelphia area. She's an executive claims adjuster at CAU. And so we're going to kind of split up this presentation. I'm going to talk a little bit about the legal aspects of insurance for our association clients or for your association if you're on the board. And then Danielle is going to take the remainder of the time to talk kind of the insurance 101, tips and trades for insurance and stuff that you need to know about your policies and how that works. So I know we're on Zoom. I prefer if you have questions, just jump in and ask me. You can save it to the end if you want, but I like to have conversation throughout this so that, you know, we're not the only ones speaking. I mean, I think it benefits everyone to hear your question, and if I have the answer, I'll give it to you. And if I have to give you the lawyer response, if it depends, or I'll have to look it up, I'll tell you that as well. So, but let's go ahead and get started on this. So as I said, we're gonna talk about kind of the specific insurance requirements for your community. We're going to talk a little bit about the differences with condominium associations because there are some specifics that only apply to the condos. We'll talk a little bit about risk management, and then Danielle will cover the insurance coverage aspect of this. So I think when we're talking about insurance requirements for our associations, you have to be familiar with two sources of law. One would be our statutes, and I guess before you even get there, you have to know whether your community is a planned community as defined in the statute, or whether it's a condominium as defined. Those are the two types of communities. There are co-ops in Arizona, but they're very few, so I don't really ever talk about those. But for the most part, in this valley here in Maricopa County, Pinal County, we deal mainly with planned communities and condominiums. So you got to know that first. I mean, if you're a townhome, you could fall under one of those categories. So you got to know which one it is. And so once you've determined that, then you know what statute to look at. And the statutes, when it comes to insurance, as we'll talk about here in a minute, are very different. The other source of law, it's probably just as important, if not more important, would be your governing documents. And for purposes of this discussion today, what we're really focusing in on are the CC&Rs. That's where you will find your insurance requirements, your insurance language, and that's what you need to be familiar with. And then we'll talk a little bit about fiduciary duty for the board members. So when we're talking about statutes and governing document requirements, you know, I first want to talk about the planned communities. And if we were all in person here, I'd ask for a raise of hands of, you know, who here lives in a planned community or manages a planned community. And the same for condominium, just to get an idea of what we're dealing with. But the thing to know is,
Quinten,
sorry, go ahead.
They can raise hands on the reactions.
You know, I figured I would learn how Zoom works, but well, we'll just assume that we have a good spread here in our class of planned communities and condominiums. So for those of you who manage or are a board member for a planned community, this next little bit is for you. When it comes to the statute, there is not a statute in the Planned Communities Act that governs and addresses insurance requirements. It's silent in the Planned Communities Act on that issue. So with that, then when it comes to insurance, it really becomes a matter of what do our governing documents say? What do our CC&Rs say for our planned communities for insurance? And kind of what are those best practices? And that kind of goes to this fiduciary duty issue that we'll talk about. But as you know, and I'm turning my head here to pull up I'm just going to put this on the screen for you. Actually, that's not going to work because it's a PowerPoint. for those of you in planned communities, your CC&Rs, I mean, they are very similar in a lot of aspects, but when it comes to insurance, it can vary in as to what the language is and what is required of you. Most CC&Rs for planned communities will have a section that's titled insurance. If your CC&Rs are older than, I don't know, maybe the mid 80s, you may not have a section on insurance. It may be kind of buried in another section and maybe a brief reference to it. But the newer documents typically spell it out pretty clearly as to what insurance you need and what to look for. But there's different types for your planned communities. You're going to have your general liability insurance. That's going to cover you from those accidents that might happen in your community. You're going to have property insurance that governs your common area, that common property that the association owns and maintains. But as I mentioned before, it's so important to know what type of community you are and to understand your documents, because your documents are going to set forth different areas that as an association you have to maintain. And with that is likely going to come an insurance obligation to insure those areas. So you have to know that difference in the different parts of your community. Some of you, it's very easy to determine. You have some green belts, you may have a park, maybe you own the streets. But for other communities, it does get a little bit more complex when you try to determine this maintenance and insurance requirement for your community. Other types of insurance that you may be required to obtain for a planned community would include workers' comp. Now, I know most of the associations in Arizona, most of the planned communities do not have employees. They have independent contractors. But that's a conversation you'll want to have with your insurance agent on whether or not that would be a policy you should get. There's also fidelity coverage to protect against theft from board members or vendors that might walk away with some of the association money. And those of you who have been living here long enough, that has happened here in Arizona, more than obviously more than it should, but it's happened a number of times where either managers or management companies or even board members have absconded with money that belongs to the association. So you might have a policy that can protect against that. There's also another policy that you definitely need to have, and that's a directors and officers liability policy that will protect your board members. I had a situation years ago where in my little community that I live in, my wife was actually on the board for many years, and I tried to keep out of it because I just wanted to pretend that I didn't see what was actually going on. And but she did tell me one day that they had this issue come up, and I asked her if they had their directors and officers liability coverage, and she kind of looked at me like she didn't know what I was talking about. And come to find out, they didn't have that policy in place. And I almost fell out of my chair. So the next morning, I gently not pushed her, but suggested, you need to go get that policy for the board. So make sure that you have that coverage for your community, and that applies to both condominiums and planned communities. That's nothing special for a planned community. Your board members need to be protected from claims, because lawsuits happen, claims are made. So there might be other coverage requirements that your CC&Rs mentioned. So you just need to familiarize yourself with what those requirements are, and make sure you're covering that. So really, for planned communities, that's what you're dealing with, is that it is driven heavily by your documents. But even if your documents are silent, the kind of that best practice is you need to have protection for the property that you maintain as a planned community, and against liability. But you also need to, at a minimum, have that directors and officers policy to protect your board members and officers of the association. So any questions for planned communities? All right, so for condominiums, it is a little different. This time we actually do have a statute that governs and dictates the type of insurance, and it's really a minimum standard type of analysis. Your documents may require something more extensive, and you would follow your documents. But ARS 33-1253, if you manage or live in a condominium or on the board of a condominium, you really should try to familiarize yourself with this statute. It's one of the longer statutes in the Condominium Act, but it does kind of set a minimum requirement for the property insurance you need to protect and insure the common elements of the condominium. It also talks about liability insurance. And then the one part that it gets a little interesting is it does say it doesn't require you to insure the units. It kind of defaults back to what do your documents say. But it says that the board has the option to insure the units if it wants to. But the way I always look at it is you got to read this statute in conjunction with the Condominium Act to see do the CC&Rs require us to insure the units or just up to the wall that separates the common elements from the unit. And that's a really important discussion and analysis that you have to make. Part of that analysis, as it says on the screen, is understanding the different components of your condo. If you are part of a condominium, you have to know what the definition of a unit is. What are your common elements? Where is the line that separates those two components of the condo? And with that, for a lot of my condominium clients, they will have me assist them in drafting a maintenance matrix or insurance matrix. And I don't know how many of you have done that with your attorneys or with your community, but I think it's a really important thing to do because it will lay out all those different components of your community, and it will determine who maintains that part of the community and what are the insurance requirements. And it could even go as far as to talk about how are claims to be made on the association's policy, and what kind of policies do the owners need to have to insure their units. Danielle might speak more on this later, but for most policies for condominiums, you'll have references to like a bare walls policy or a walls out policy. And most policies won't cover the kind of the improvements and the betterments that owners make to their units. It's kind of that the basic coverage of the unit. But you need to make sure that you have the right amount of coverage for your condominium. And you also, I have seen instances where associations are insuring more than they need to insure. And that becomes an analysis of, well, what are we spending our assessments on? Is this the best use of our assessments? Are we over insuring our community? And if we are, should we be? And that's probably a discussion you need to have with your insurance adjuster and with your attorney. But you need to find that area of that kind of that sweet spot of the areas that you're supposed to be insuring and maintaining. The question comes up a lot with how much insurance is enough. Some of the older, obviously the dollar is different than it was 20 years ago, maybe when your documents were written, and a minimum of $1 million of liability coverage may not be enough, or $1 million for property coverage may not be enough. So that's something you're going to have to, if you're on the board or as managers in advising the board members, you need to look at what property do we own, what property do we manage, and what is the value of that property, and how much money should we have for insurance. One common issue that comes up in the insurance discussion is the payment of deductibles, and that is where you'll get the attorney response of it depends. If you were to ask the attorney who pays for the deductible, it really does depend. I wanted to kind of keep track of the chat box here, and I just got a comment here. Let's see. CC&R state each unit must have a secondary policy to cover what the association's master policy would not. How does the board enforce this restriction when the association management cannot ask for a copy of the COI? Vern, that's a great question. That's one thing I probably should have put that on the screen too, is, your documents hopefully will speak to what types of policies the owners need to have, and whether or not they need their own policy, or whether or not they just need to kind of fill that gap, a gap filler of covering the stuff that the association's policy doesn't cover. But how do you enforce that? Well, it's tough to know what they have, but at the end of the day, it is their responsibility to have it. So if the association has provided that notice and made it clear to your owners, this is the type of policy you need to have, and they end up not getting that policy. I mean, this is something you may not find out until an incident occurs, and you may not realize that they don't have it. But as long as the association has protected itself and provided notice of what the requirements are, then you're going to be okay. But it can be a loophole, and that's, I think, kind of highlights the importance of having this analysis with your insurance company and with maybe your attorney to understand completely what it is that we have to insure. What are we required to insure? What are the owners required to insure, so that everyone's on the same page, and then communicate that to your owners. Vern, you mentioned there was a fire in one of the units that had no policy. I have a similar story from it's probably 10 years ago now, where the association CC&Rs, they required the owner or the association to insure the units. Kind of this walls in, or is it a barrel walls? Whatever the phrase is. They were required to insure the units, and that's what all the owners understood it to be. And the owners had little policies maybe to cover the gap. They went to renew their coverage, and they were looking for a cheaper policy. Whoever they used as the adjuster or the agency, they didn't read the CC&Rs very carefully, and they switched up the policy and to where they were just covering the buildings and the common elements, and they took out that coverage for the units. And as luck would have it, or bad luck would have it, during that 1 year of the policy, an owner's unit caught fire and burned to the ground. She didn't have coverage for her unit because she was still relying on the way they had done it for many years. And there wasn't any evidence to suggest the association had notified them of this change, or that they needed to go get their own policy. And so the association was sued. The board members were sued. The management company, everyone was sued, and there was a big settlement in the owner's favor. The association was clearly in the wrong. But that was a lesson that I was part of the defense of that, and that was a lesson that I've always taken away from that, of the importance of understanding your documents and communicating this information to your owners, especially if there's going to be a change in your policy. You need to communicate that if there's any sort of change that may be different than what they were expecting. But back to Vern's question, and part of that conversation needs to be kind of stressing the importance of them having the policies the documents require them to have. So, but back to the deductible question of, it does depend on whether or not, or who pays for that deductible. Deductibles normally are a common expense for the condominium, and which is paid for by the association. I have seen some language in CC&Rs where that could be a shared expense with the owners, depending on the owner. But for the most part, deductibles are going to be a common expense that the association pays. Now there are situations where, what if the damage doesn't cover the deductible, or it doesn't exceed the deductible? That may be a situation where you don't even file a claim, and you don't have to file a claim because it doesn't exceed the deductible. But the other big thing, and this kind of goes back to that maintenance and insurance matrix, you wanted part of this discussion in that matrix is who is going to pay for the deductible, and when can we pass that back to the owners? And that's another determination that needs to be made. And I put a statute up there on the screen of ARS 33-1255. Those of you who are familiar with condos probably know what this statute is, but it's the pass-through expense statute that's in the Condominium Act that says that unless your documents state otherwise, any common expense that benefits fewer than all of the owners shall be assessed against those owners who benefit. So it's not even a discretionary thing. If you have a common expense, and a deductible could be a common expense, if it only benefits the one owner who has damage to the unit, if the documents allow for it, you have to pass that deductible back to the owner, and the owner pays for it. So that's part of this analysis that has to take place with your community to know whether that's an option you have. And then that's probably a discussion you need to have with your counsel to know whether or not, because the attorneys in this area of law in our industry here, they know what to look for to know whether or not the documents would allow for this pass through. But it's something that you need to look at, because that could be a big cost savings to the community. And as the statute says, you have to pass it through to the owner if it benefits fewer than all the owners. So I have a question here. How would you handle an intrusive investigation to find a leak? Holes are opened up to find the source of the water leak. Should the HOA's budget for these expenses or pass along to the unit owners? Ramiro, that's a great question. And I think part of that does depend on what your documents allow you to do as far as covering those expenses. And then who has to maintain what. There is going to have to be an analysis done to determine, especially if it's a leak, where did the leak come from? Where was it a limited common element that leaked, or was it a common pipe for the building? But then also you want to look at what your documents say about who maintains what. It might be something where the owners are still responsible to patch the holes, but again, it depends on a lot of factors for that question as to who pays for what. So that's probably the best answer I can give you right now. I put up here the possible changes in the law, and I know I'm going through this quickly, but we do have a lot to cover. For those of you who are following the legislative session this year, there is a proposed bill. It's House Bill 2251, and that bill is seeking to amend this statute that we just talked about, this 33-1253, and it's going to change a couple things if it goes through. One big change that will occur if this goes through is that it will now allow unit owners. It'll give them the right to report a loss directly to the association's insurance policy, rather than having to go through the management company or the board. They'll just be able to make a claim. But there's also some protections added into that before they can report that loss, they're going to have to notify the board. And there's some back and forth going on right now as to what this language might look like. But essentially, it will say that if they have a claim to make, they're going to have to notify the board or give the board five days. Right now is what it's written. 5 days to look at the claim, decide whether it's a claim to be made. And then if they decide it's not something that the master policy will cover, they're going to be required to provide written notice to the owner as to why it's not being covered. So the details of that are still being worked out with the legislators. But one of the other requirements will be that the association will be required to inform each owner on an annual basis of what the amount of the deductible is and what the owner's responsibility is for that deductible. So one way that you're going to be able to meet that requirement would be through a maintenance or insurance matrix that you could create for your community. So there are other small changes, but a lot of it is just kind of rewriting some words. But that's the kind of the meat of that bill. Right now, it's passed through the House. It's in the Senate right now for consideration. If it makes it out of the Senate, it'll go for a final vote and then be put to the governor's desk for review and signature. So, and it doesn't seem like there's a lot of opposition to it. So it seems to be kind of making its way through. But that's House Bill 2251. If anyone wants to look it up and read the exact language, I would invite you to do that. And I mentioned this before. I don't know why this is coming up this way. Let me just get it all on the screen. Something got messed up there. We talk about this insurance requirement, and I can't stress enough the importance of getting this right, because I do think that there is a fiduciary duty on the members of the board to get it right, to make sure that they have insurance when it's required and that they have the right amount of insurance. That's kind of the why do we get insurance? Well, because the statutes and the documents require us to. It protects the association and the board. And there's that. I think there really is that duty to have it and to have the correct amount. And then there's this safe harbor, this fiduciary duty for those of you who have taken other classes where we talk about fiduciary duty. There is this safe harbor that the board members can get into and be protected from liability if something hits the fan by relying on experts and knowing their documents. So as managers, I think one of your tasks, and it's a tough one, is to get board members educated and to help them to understand what their responsibilities are. But then to trust the experts, call the insurance companies, the Daniellas of the world, or call your attorney and get that opinion, get that matrix, so that at the end of the day, the board can sit back and say, hey, we relied on the experts. It's not our fault. And there is case law that protects board members in that situation. And like I says, if you don't purchase insurance, you're self-insured. And if something happens, well, the association is going to have to find a way to pay for a claim if you don't have insurance. And I think you can also help the board members understand that if you don't have directors and officers liability coverage, the association may still have to indemnify them, but there's exposure there for the community, and owners may look at the board members and try to blame them for not having proper coverage. In the last couple of minutes I have before I turn it over to Danielle, I wanted to talk a little bit about kind of this risk management, things that your community can do to protect against claims, to protect against big losses. And I've talked a little bit about this already, but I will stress again the importance of understanding your maintenance obligations. As an association, especially if you're on a board, you really have to understand what it is that we have to maintain and when can we pass the buck to the owner for that maintenance. You may need to get an opinion on that if you're not sure, because a lot of documents, unfortunately, are not. No document out there will spell out every single component of a community and who maintains it. It is left to some interpretation in some cases, but you got to make an effort to understand that. And then when you understand that, you have to use reasonable care and be prudent in maintaining the common property, maintaining those areas that you're responsible to maintain. You have to have a plan in place. So sometimes I'll ask, usually it's when a claim has come up and we're looking for a defense. What is the history in your community when it comes to maintaining the roofs or maintaining the common property? Do you have a set kind of schedule of an inspection? How often are these components inspected? These are the types of things that I think you should have in place, because it can be a good defense to show that we have a consistent maintenance schedule and a routine. And this is more of just an act of God of what happened. It's not, the negligence of the board and not maintaining the common property. But you should have that plan in place, and you should be very reasonable and prudent when it comes to maintaining your property. You got to understand your documents and make sure you're complying with those, and that you comply with the statutes as well. That's another way to avoid the risk, is just complying with the statutes. There are a lot of requirements out there for board members, not just with property damage and insurance, but other requirements that board members have that can protect you against liability. And you'll see on the next screen some of the common claims that we get here in Arizona. But also make sure you have a sound fiscal basis for your community. What are you doing to make sure that you're collecting unpaid assessments? What are you doing to make sure that you have enough in your reserve account? When's the last time you had a reserve study conducted? If it's been, maybe more than 3, 4, 5 years since you've had a reserve study, you probably ought to go get another one, and make sure you have an understanding of the value of your community. And that then goes to the understanding the amount of insurance you need. But obviously you got to be in have a sound fiscal basis for your community and have those funds. And then maintaining accurate records is important. And as you'll see on this next slide here, I just checked today, and I don't know how many of you are familiar with the Department of Real Estate and the kind of administrative claims that can be filed against associations. But right here are the top 5 claims as of today for the first quarter of 2023. These are the 5 most common claims that the Department of Real Estate is receiving. And these are claims owners are making against their associations. So, and if you look at this, a lot of this stuff either goes to knowing the statutes and complying with them, or knowing and complying with your documents. And that's usually what it comes down to, is that the boards make a mistake or someone makes a mistake and isn't following that. So, risk management, I think, is an important component of this discussion, because it can help keep your policy, your deductibles, your premiums can kind of help them down, keep the claim numbers down, keep the loss down, and it helps you to avoid those uncomfortable situations where you can't find an insurance company to insure you because you have too many claims, or your insurance company drops you because there's so many claims, those types of things. So,
and just as a sneak peek, as I'm looking at this list, things like failing to follow governing documents are not things that are going to be necessarily covered under your D&O policy.
Yeah. So I think with that said, I mean, if there's no other questions about kind of I know this was a basic overview of insurance, but if there's any questions, you just let me know. If not, I want to turn it over to Daniella at CAU from CAU. And if any of you haven't, I mean, I'm just going to put this plug in because Daniella is great. I highly recommend CAU as an insurance company for communities. We do work a lot with them, and I have seen a lot of their policies, and they're a good company. So if you're looking for someone, I put that plug in for Daniella. But
well, thanks.
But Danielle, go ahead and take it away.
All right. Well, I apologize to everybody in advance. I woke up healthy. My cold has just gotten increasingly worse as the day goes on. So I have a sneezing fit. I'll try to mute, but I apologize now.
Let me see.
So
I gotta fix the screen here. Hold on.
Yeah, you need to unshare.
I'm gonna stop sharing so now you can share.
Okay. So I've been with CAU for almost 12 years. Prior to that, I was an insurance defense attorney in New York City for about 8 years. So I've been in the insurance world for 20 years so far. So like Quinten said, please jump in with any questions. Feel free to interrupt me talking or post something. And I will do my best to answer it. And if I don't know, I'll let you know that I don't know, and I'll try to find the answer. So I'm an executive claims adjuster at CAU, and I'm going to be doing a little bit of an insurance primer for general liability and D&O insurance. A little bit of a coverage primer, I guess. So we'll start with the GL, general liability coverage. And the first, let's see, hold on. I'm going to share my screen now.
Oh, and Danielle, just real quick before you jump into that, I do need to give, because we are offering credit for this class for.
Oh, did you give a code?
And I need to give a code that you're going to have to give back to Terry at the end to get your credit. And the code is the word policy. POLICY, policy. So just write that down, and you can give that to Terry at the end to get your credit. Okay, sorry.
No, good deal. Okay. Oh, that worked. Okay, excellent. So that's our lovely office in Newtown, Pennsylvania, or was our lovely office in Newtown, Pennsylvania, where we've since moved. So the first thing I wanted to discuss is medical payments. Our policy and most policies that I've seen provide $5,000 in medical payments. It's a no-fault coverage that really is just an offer of good faith when somebody sustains an injury on your property. It'll cover their out-of-pocket medical expenses. It's available for 1 year from the date of loss. So that's just a great thing to know that that's available. Lots of times people say, I don't want to sue, but I have I have a high deductible health plan and my deductible is $2,700 and it's January 2nd. And you can offer this to help cushion that fall for them. So the general liability coverage part says that and I'm going to be talking about the CAU policy, right now it's with Munich Re. That's what I've been working with for 12 years. But it is pretty comparable to other policies. But if you have a question, please let me know. So the general liability coverage part provides that we will pay those sums if the insured becomes legally obligated to pay as damages because of bodily injury, property damage, personal injury, and advertising injury. I've never had an advertising injury claim, but bodily injury, property damage, and personal injury we see all the time. Bodily injury will include things like mental anguish. Personal injury will include things like discrimination. A key thing to note here under the general liability coverage is you need to know who would be considered as an insured under the policy. Lots of times a lawsuit will be filed naming everybody in the kitchen sink because they just don't know who to name. We see that a lot. And you need to know who are we going to be offering a defense to. So obviously it's the named association, the community manager, board members, but we also provide coverage to unit owners, but only for liability arising out of the ownership, maintenance, or repair of property that is not reserved for that specific unit owner. So for instance, if somebody trips and falls on a sidewalk in front of Quinten's house, and Quinten is named in the complaint, even though if he's not responsible for that sidewalk, we would provide defense to him because it's liability arising out of ownership for something that he does not own. Similarly, I have a claim right now where it's a 55 plus community and a couple younger than 55 have moved in, and a unit owner is complaining about this younger couple moving into the 55 plus. In that instance, it goes to the ownership of property that is not that specific unit owner's own property. So if I live there, I'm complaining that Quinten, who is 22, is moving into the 55 plus community. I would also be covered as an insured under our who is an insured provision in our policy. Some common things to consider is there's going to be no coverage for for bodily injury or property damage if there's no occurrence. And as you see here, occurrence is defined as an accident, including continuous or repeated exposure to substantially the same general harmful conditions. So if you have, for instance, a claim where the unit owner is saying that the board is not allowing her to park in a certain area that she needs to park in because she is disabled, let's say, and that because of that, she has sustained severe mental anguish and is now depressed or myriad of things. Mental anguish would fall under bodily injury. However, there's no occurrence there. It's the association's intentional decision to not let her park there. So that's not something that would be covered under the general liability coverage part. It may be something that would be covered under the D&O, but it's not something that would be covered under the GL. There's also no coverage for property that is specifically owned by the association. So if there's a property damage claim and the association's common element was not maintained, that something, a pipe burst, let's say, and damaged a unit, fixing the pipe is not something that your general liability carrier is going to cover. They would cover fixing the unit, but not the pipe, not the association's own property. There's also no coverage for property damage that arises out of mold, which is a big one. There is property damage. There is coverage for property damage arising out of water intrusion. So when you have those property damage claims, hint, hint, there's coverage for water intrusion, but not for mold. So when people say it's all mold everywhere, that's an instant denial of coverage. But if there's before it gets to mold, if there's something else there, we can provide coverage for that. I'm going to move on to the D&O coverage because that's just way more interesting. Does anybody have any questions about the GL before I move on to D&O? I can't see this. Oh, yes, I can. Okay. All right. No questions. The D&O coverage is a claims made policy. So that's going to be, whereas the GL coverage is when the claim occurred, the D&O is when the claim was made. So that's an important distinction to understand. There's lots of times where a complaint will trigger both the D&O and the GL, but we're looking at it under two different policies. And we'll talk in a little bit later about a reservation of rights. So you may get an ROR. You may get an ROR letter that is referencing two different policies, and you're like, wait, why? That's the reason. Property damage is when the policy that's triggered is the policy that was in place when the damage occurred, and a D&O policy that is triggered is when the claim itself was made. So the D&O coverage covers a wrongful act resulting in a loss. So a wrongful act in our policy is defined as any error, misstatement, or misleading statement, act or omission, or neglect or breach of duty committed, attempted or allegedly committed or attempted by any insured in the discharge of duties to you or any matter claimed solely by reason of service in such capacity. So it seems like it is very broad. Wrongful acts cover a lot of different things, including breach of fiduciary duty, breach of government documents, disparate treatment of unit owners. statutory violations, charging inappropriate assessments or late fees. We see that all the time. That often comes up as the next example is a retaliatory counterclaim. So, you impose fines against somebody for a violation of garbage cans or whatever it is. And they say, no, you were never entitled to do that. And in fact, we think that we haven't been putting away our garbage cans because, board, you have been doing XYZ to me. So we see a lot of retaliatory counterclaims. And wrongful foreclosure actions are quite common as well. An example of a suit where there's not going to be a wrongful act, so there's not going to be a duty to defend the association or the community manager, is when there are certain declaratory judgment actions or foreclosure actions where the association is only named as an interested party. So if the association would have a recovery interest when the unit is sold, but there's no allegation in the complaint of the association doing something wrong, unfortunately, while the association may want to have an attorney assigned to them for that, that's not something that the insurance company would cover because there's no actual wrongful act alleged against the association. Additionally, when there's a subpoena filed against the association for documents, that's also something that there's not going to be any coverage for. That's something that you would have to go back to your general counsel to, if you wanted an attorney to help you with that. So I have an example here of some D&O claims that I thought were kind of funny. So there's this little birdhouse that the kid makes, and it says the structure in question wasn't approved by the Architectural Control Committee, because we see things like that in associations. And then this other one here saying, see, I created this website for our neighborhood, www.sunnysideboardiscorrupt.org. Don't do things like that, because that's also not covered. Or that's also an example of a D&O claim. So,
but that first one, there would be coverage on the first one, right?
For the birdhouse?
The architectural one?
It depends on what the architectural committee, how long did they respond within the required 50 days?
Okay.
For the governing documents, I don't know, Quinten. There's lots of questions there. The D&O, the CAU policy does not have a separate limit for defense money. So the defense costs are outside of the limit for monetary claims. Our limits don't erode. So if there's $1 million limit on a claim, we can spend $10 million defending it, and you still have that $1 million limit. There's also no deductible, and we cover full prior acts. So like I said, under the D&O, the policy that is triggered is the policy that was in place when the claim was made, but it doesn't matter when the wrongful act occurred. The policy that's in place when the claim is made is the policy that's going to be in effect there. That being said, the board members that could have done that wrongful act 3 years ago would still be insured under our policy, under the current policy. The who is insured policy portion provides that any person who has been, now is, or shall become a duly elected or appointed director or trustee, a duly elected or appointed officer, an employee or committee member, whether or not salaried, and any of your members acting at the discretion of your board or directors on your behalf in a voluntary capacity. Those are all board members. The interesting note here is committee member. You want to check your governing documents if you're in an association where there's a recreation committee or a pool committee. Is that an actual committee member per your governing documents? You want to know that before unit owners sign up for things like that, so that they know whether or not they'll be covered. For instance, in my community here, we have a pool. A couple of well-meaning unit owners decided to have a party planning committee in our development here and asked if I wanted to join, and I said absolutely not. I was not going to be responsible for a party at our pool with children and who knows what can go wrong and not be covered by our board, because a committee member, that's not an actual, there's no pool party committee as provided in our governing documents. Architectural committee, yes. Pool party committee, no. So you want to double check your governing documents for that. Additionally, a spouse of a board member is going to be considered as an insured under our policy, but only if they're being named in their capacity as the board member's spouse. So let's say Quinten and I are married and we go to a board meeting. I'm the board member, and Quinten, who you all know just is so hot-headed, stands up and starts yelling at the board, or starts yelling at somebody for whatever. And a suit is then brought against the board and Quinten. If there's specific allegations against him for what he did, and he's not just named as my husband, there's no coverage for him under the policy. He would have to go out and get his own attorney for something like that. And of course, our community managers are also insured under the D&O policy. Some common exclusions under the policy.
And just real quick, Danielle, on that other one, I mean, here in Arizona, we're community property state, so spouses are going to be named quite often, just to try to attach to the, their interest in the property. So
absolutely,
I think that coverage would come up quite often because they're just going to be named because of community property.
Absolutely. And there are times when we try to be super duper kind and extend coverage to the spouse, even if there are a couple of allegations against them directly. If it's something super minor, we just may be able to kind of bring them into the fold of the main litigation, try to get them out of the case if it's something quick and easy. But if it's not, then they're on their own and need to get their own attorney. Some policy exclusions. The exclusions are so important to understand and to know and to reach out to your insurance professional if you don't understand them, because it really affects coverage. These are things that if it applies, there's no coverage provided to you. I'm going to take a step back and explain the difference between there's a duty to indemnify and a duty to defend. The duty to defend is going to be greater than the duty to indemnify. So the insurer may have an obligation to provide a defense to you, to hire Quinten to be your defense counsel. However, if there is an award issued against the association, the insurance company may not actually provide the indemnity for that dollar amount. And we'll get to more of that in a second. But prior written notice and prior litigation, those are claims that arise out of a prior policy. Those are not things that would be covered. So if you knew, so while there's no retroactive date, if a policy did not exist, sorry, let me back that up. If the circumstances of the claim came about prior to the policy, that's not something that's going to be covered by the insurance. Employment-related practices, that comes into play sometimes with a community manager. If the community manager is let go for some reason, then there may be an employment-related practice claim. That's not something that's going to be covered. Discrimination is really the big one. We see that a lot. Fair housing complaints, ADA complaints, HUD complaints. Discrimination is one of those things that we'll have a duty to defend the association, but we're not going to have a duty to indemnify them. So if it's determined that because of the discrimination sustained by the association that I have truly suffered and I have $100,000 in damages, that's not going to be something that the insurance company is going to pay, although they paid for the attorney to defend that action. Remuneration and personal profits is also something that's not going to be covered. So don't have anybody steal money and then try to get that covered. Injury or damage comes up quite a lot. Insurance is designed to fit like a puzzle piece, and it's not necessarily overlapping when you have the GL and the D&O. So if it's something that's going to be covered by the GL coverage, bodily injury claim, a property damage claim, that's not going to be covered by your D&O coverage, and vice versa. Breach of contract obviously is the huge one. As Quinten pointed out, some of the top claims involve failing to follow governing documents. That goes into breach of contract. There is a duty to defend the association, the community manager, the board members that are named, but there's no duty to indemnify them. So, for instance, right now I have a claim where they were redoing the pavement, they were redoing a parking lot, and the contractor did a terrible job, and the association refused to pay them. We're about $50,000 into defense costs, but we have no duty to indemnify the association and just pay the amount that the paving company wants. It's a breach of contract claim. They didn't pay what was owed, and so that has to go back to the association. Some common policy conditions that are seen in both the general liability and the D&O. You have to give us notice as soon as practicable of any claim made against you for a wrongful act, and must cooperate as required. So as soon as you find out about it, you risk coverage if you wait a year to tell us about it. Additionally, you have to cooperate with the insurance company. There's lots of times where they say, well, we handed it over to you, now we're done with it. Quinten literally cannot do his job if he cannot speak to the insured and get the information that he needs in order to be able to provide a defense. So cooperating with the insurance company, with the defense counsel, is incredibly important. I know a lot of times the insured will get a phone call from somebody that they don't know, and I'll get an email back saying, is that somebody related to you? Were they hired by you? Are they connection to the insurance company? And I let them know, absolutely, feel free to talk to that person. They're there to provide you with a zealous defense.
Danielle, doesn't the cooperation also apply? Like, for example, if the plaintiff comes to us with some sort of settlement offer and the board can't stomach the fact that an owner is going to receive $20,000 in settlement, but the insurance, like, we're going to pay that and make this go away, they have a duty to cooperate there as well. They can't stonewall that.
They do. And under the CAU policy, there's actually no hammer clause. So, and there's no, I can't think of the word, but we don't require the insured's authority to settle a claim. The insurance company, at least my insurance company, is able to do that unilaterally. So if we decide, you know what, we're spending so much money on this, we've got to settle it, we can do that, and we need the insured to cooperate with that as well. That's a really, really, really hard pill to swallow. Being a defense attorney for years before I moved over to the insurance side, I completely understand that. I never wanted to settle anything my first several years at CAU, but sometimes we just have to for business purposes.
Is it the consent clause, like the consent to settle?
Thank you, consent clause.
Yeah.
No consent clause in a CAU policy. But I do assure you that we always have the insured's best interest, as does any insurer. We often get the call of, how could you do this to us? How could you pay this person? Don't you know what this person is like? We warned you about this. But the amount that is spent either in defense costs or in indemnity is showing up in your loss run one way or another. So sometimes it just makes more sense to cut off the defense costs, resolve the claim, and be done with it. Voluntary payments are also another huge one. Insureds cannot retain their own counsel, wait for the claim to go south, and then hand us the bills and say, here, can you pay this and get your own attorney on this? No, we will not. You have to have written consent from an insurance company to hire your own people in order to for that to be covered, for that dollar amount to be covered. The insurance company is not going to be making any voluntary payments for anything that they don't know about. The insurers have relationships with firms and panel counsel, and we expect that our insureds honor that as part of the contract with them. And then really, really quickly, I have this little slide. When my parents don't want me to know what they're talking about, they speak in legalese. We try really hard not to ever speak in legalese. We want everything to be clear cut for you. And one of the ways we do that is by providing you with a reservation of rights. It's a scary letter to receive, but it really is there to protect you and to make everything as clear cut as possible. We want you to know, we want the association to know if there is something that's not going to be covered. We don't want it to get to the 11th hour and then tell them, oh, by the way, mold's not covered, so you're going to have to do all of that. Or breach of contract's not covered, you're going to have to cover all of that. We need to let you know in advance so that we can really decide how we're moving forward. And so that the association is prepared if it's something that's not going to be covered by the insurer, that they're going to have to kick in. So a reservation of rights is nothing more than a letter from the insurance company to the association, literally reserving the insurance company's rights to further investigate the claim and to later deny or disclaim coverage or to limit coverage. It's important because you need to know what's covered. It's crucial in being able to make decisions going forward, in evaluating a settlement demand in a policy that does have a consent clause. You're going to want to know what is being covered by my insurance policy. And if you do receive an ROR, don't panic. Share the letter with your general counsel, and certainly always call your insurance agent or your insurance producer and ask for further clarification. They're happy to share the information with you. That's all I've got. Anybody have any questions? I got it in just 3 minutes to spare.
All right. Well, thank you, Daniela. Any other questions that have popped up on either topic we talked about? Well, we appreciate your time today.